Welcome in, folks. We got a three-piece to react to here today in this video. Holy smokers, this ain't no jokers. You better be ready to get full bullish mode in this video here today, folks. Okay, first one to react to, get out of cash, says Josh Brown. He says, get the heck out of cash. We're going to react to that one. I'm going to share my opinions and perspectives there. Then Mr. Big Short, Steve Eisman, is talking about the U.S. economy is more dynamic than it's ever been in history. Maybe talking up the economy. Oh my gosh, Steve Eisman, Mr. Big Short. This is going to be interesting. And then we're going to have a blow off top scenario. We're going to have Cathie Wood speak about Tesla $2,600 price target. Oh my gosh. Okay, this should be a fun one to react to here today, folks. I appreciate y'all joining me. I'll ask in return, hit that like button and make sure to subscribe to the channel. I think we're right around 46,000 subscribers at this point in time. Pin comment down there. I'll put the application for my private group. If you're looking to join my private group, get access to all my course curriculums, learn everything I got up here, as well as get access to our 6 and 7-figure Discord chat, all those sorts of things.
That the S&P has even greater upside. Josh Brown, where do you stand?
Look, I have a message for everyone watching this. If you want to know what professionals are, or at least should be telling clients right now, it's very simple. Get out of cash. Get out of cash. If you have money that you're not using next year, later this year, tomorrow, and it doesn't need to be that liquid, you have a 3-year, 5-year, 7-year time horizon on that pool of money, I want you to consider extending duration. I'm not asking you to take credit risk. You could do this with treasuries, no problem. But you are going to now see rate cuts. You're seeing softening in the data. The rate cuts will be justified. I'm not saying you're going to see some sort of like massive economic turndown, but I think your days of 5.5% yields risk-free are coming to an end. I don't know the exact date. I don't predict interest rate moves, but it feels very likely to me that the smarter bet, if you look back 5 years from now at a portfolio, the smarter bet will have been to extend those durations, accept less overnight yield, but have that runway so that you're earning more over time. We did this for clients between February and March across all of our asset allocation models. It was the first time we had shifted back into fixed income from cash since 2020 when we went the other way, when you weren't being paid.
Okay, let me be very clear about what he's saying here, because I think this could be misunderstood. When you see a headline like that, get out of cash, I think a lot of people, even myself, I was thinking he was going to basically say, get out of cash, go buy stocks with that money, right? But basically what he's saying is be in treasuries, but be longer duration. You might not be able to get as high of a yield as you could, let's say in a 6-month, but take it on out a bit, right? And so that's an interesting perspective. Buy a treasury that's maybe 5 years plus out and accept a lower yield, maybe something in the 4s versus something in the 5s at a shorter term yield. So, you know, I think it's a decent strategy. I don't love it though. I mean, you can still get on savings accounts, you can still get, high 4s. Of course, you're not locked in. So this is something to consider as well. So this is kind of one of those moves. I think it matters more if you're a super high net worth individual and you've got, let's say, $500 million of assets and you've got, $50 million in treasuries. Okay, I understand that. Maybe go out 3 years, 5 years, 10 years, something like that. Get a little lower of a yield. That's fine. But you're locking in that money, that $50 million, for a long period of time. So I can't say I disagree with Josh Brown here.
Duration at all. You're about to be. It's not tomorrow, but it's coming. So I want you to start thinking about that strategy. I think the markets are getting it. State Street is out with some research this morning talking about ETFs. $90 billion came into ETFs in May. That is roughly a third of all of the inflows for the year coming in 1 month. Remember selling May? Nobody listened.
Yeah.
It went the other way. Of the 90 billion that went into ETFs, 60 billion went into equities, but 30 billion went into fixed income, because I think the message is starting to hit home that this is not going to be forever. So that's where we are right now, and that would be the thing that I would say is my biggest takeaway from what we heard this week and what I think we heard this morning.
You know why I love that? It's because what you said...
You love me.
Well, I do, but no, you just said, who cares about rate cuts? Seriously, I mean, I said September, and Jason, you just said maybe we don't even need it. And the point of the matter is the markets really don't care at this point in time. September, December, it doesn't matter. This economy is strong.
Wait, can I push back on you guys? Because we're going to talk about the cyclical trade later, but cyclicals have certainly lagged. Since the last Fed meeting, I believe the S&P is up about 7.5%. You look at materials, financials, industrials, up about 1%, give or take a few basis points here and there. So clearly the market...
You're bringing this up because I feel like Mr. Cyclical. Look, all right, so Scott's not here, and I'm not going to try to get away with murder, okay? But TSA passenger counts...
I will text him.
Who said he's not watching Scott? I'm going to get it under control, I promise. But go ahead, Jimmy.
Look at TSA. People are traveling like crazy. Look at Las Vegas visitor statistics. Look at auto sales. Look at what GM did and I know we're going to talk about it later.
Yeah.
Like, look at cyclicals, how they're actually doing. You're saying the stocks are lagging, factually correct. The actual operational performance of cyclicals underneath what the shares are doing is really quite good.
All right.
Yeah, but why are those stocks lagging, right? You got to ask yourself that. Well, sometimes there's no reason why a stock's lagging. Sometimes there are good reasons why stocks are lagging, right? So you got to ask yourself, why are those type of stocks lagging? Maybe it just has something to do with maybe the market believes those stocks are still going to get hit. We're still going to get the big unemployment recession, right? That could happen. It's certainly no guarantee, but maybe, just maybe, that's a potential in regards to this. Let's talk little Big Short. Steve
On the infrastructure trade and thinks there's one big hidden AI play. Joining us right now is Steve Eisman. He is senior portfolio manager at Neuberger Berman. And Steve, you're not just bullish about the infrastructure play. You're bullish about the markets writ large at this point, I think.
Wow.
That's true. I am.
So what do you see that you love?
Dang, he stuck his head out. I mean, that right there in itself is just sticking your head out. I mean, the fact that she's like, you're bullish on the markets in general, and he's like, I am. Like, okay, wow.
He is senior portfolio manager at Neuberger Berman. And Steve, you're not just bullish about the infrastructure play. You're bullish about the markets writ large at this point, I think.
That's true. I am.
So what do you see that you love, or I guess it's the absence of anything you don't love?
Well, what I would say is that in bad times, people focus on credit quality and balance sheets, and in good times, they focus on stories. And we're in story time. And there are two extremely dominant stories in the markets today, and that's AI and infrastructure. And that's what's driving the economy. And, all the economists who have said that because the Fed's raised rates 500 basis points was going to cause a recession have been wrong. Mm-hmm. And we're just powering through. And I think the only conclusion you can reach is that the U.S. economy is more dynamic than it's ever been in its history. So what's not to be lucky about or happy about?
That explains the momentum. We keep setting new records every
Correct.
day, it seems like.
Yes, I mean, what I would say is, like I had a theory a few months ago that the hidden AI play was Apple. Mm-hmm. And that seems to become consensus like in the last week.
Yeah.
So it's no longer.
How did you know that before? Because there were so many questions about Apple and what it was doing. I mean, it's suddenly become
It's not the hidden AI play. No. Anybody that thinks that's straight delusional. No.
Clear that they're going to be a distribution.
As somebody that knows his company as well or better than probably anybody out there, no, they're not the hidden AI play. And as somebody that's a diehard customer of theirs, no, it's not. It's not.
Yes, but the only thing that I know is that if AI is going to broaden out...
If you're playing Apple stock for AI, I got a bridge to sell you.
On just the cloud, people are going to use it on their phone. And so that means Apple. And it means that my phone that I bought a year ago is probably not going to be adequate. It's going to be obsolete.
Yeah.
So you're going to have the biggest refresh. So look, the next stage in the whole tech story is going to be people are going to buy new phones, they're going to buy new laptops, and that's going to have a tremendous trickle down into the rest of the tech sector.
So right now I have the 15
Me
Pro.
too.
I have the 15 Pro.
Right.
You're good to go, my friend. You actually don't need to upgrade this phone. If you have phones prior to this phone, you have to upgrade.
Yes.
And so the question is, what kind of upgrade cycle you think we're really on? Is this a multi-year upgrade cycle? Is it a finite one? Meaning, is it 2 or 3 years?
I have no idea. It's impossible to know at this point.
The economics are going to come as a result of the upgrade cycle. It is less clear to me that they're going to come necessarily from services revenue.
Look, we could say whatever we want at this point because it's impossible to know. I mean, I think it's going to be both. I think people are going to upgrade. I'll certainly get a new iPad. My iPad's a little low.
Right.
I'll get a new laptop because the last time I bought a laptop was probably 4 years ago. Maybe I'll keep my phone, maybe I won't, and then there's all the services. I mean, it's impossible to say at this point what service is going to do because there aren't any apps yet that you're going to say you're going to pay for the services, so it's all pie in the sky at this point.
If you think Apple is the secret play, but you think it's
not so secret anymore.
Yeah, not so secret. If you are you looking downstream? You say that.
We're starting to do research downstream about everybody else that's going to benefit, and hey, I'm not going to tell you what companies those are because I haven't bought them yet.
Just wait until they find out about this one company. You know what company it is? Palantir. Wait till they freaking find out about Palantir. Holy smokes. These guys are sold on Apple being an AI play? Come on, baby. Wait till they do a little more research.
What we're working on right now.
Do you hold on to your Apple position? Do you think that this
definitely hold on to your Apple position? It's too central a figure in the whole story. That's going to come.
How do you think about a Microsoft?
Oh, we've owned for years. Same story. Central figure, but it's Microsoft is not going to be. I mean, it'll be like Apple in terms of you have to figure out who else is going to benefit from all the stuff that Microsoft is doing, but that has to be a core holding.
And what about Google?
Same. I mean, there are two groups. The groups there's Microsoft, there's Apple, but then there are the people like Oracle, Google, Meta that have tremendous databases that are going to be used, and then there's going to be all the companies that'll benefit from the broadening out. The big question that I have, and I don't know the answer to this, is there's a thesis out there which I find interesting. I don't know if I completely agree with it yet, that for years software outperformed hardware. Mm-hmm. And I think there's an argument to be made that if AI is as successful as people think it's going to be, the cost of creating software is going to implode. Right. And so that would imply that the moats that some of these software companies have, not all, but some have around their businesses are not going to be quite as high. And so you can make an argument that the revaluation of hardware is going to continue and that some parts of software will derate. I think it's a kind of an interesting thesis. If it's true, it's a very long-term thesis, so there's plenty of time to figure.
Exactly.
But it's one of the more interesting.
Yeah, that's a super long-term, kind of thought process on what could happen in software companies. I think it's hard to predict right now. But, to me, I think Meta is one of the most interesting, and obviously I'm talking about my number one position. It's one of the most direct, easy plays on AI out there that trades at a far cheaper valuation than Apple and has way better growth than Apple, right? Which is why Meta is going to likely still continue to outperform Apple stock considerably over the coming years. And so when it comes to Meta and benefiting from AI, there's really like three ways they're benefiting massively from AI right now and over the coming years. One is through basically the recommendation engines whenever you go onto Facebook, Instagram, and you go in and, on there, is it giving you content that makes you say, oh, this is enjoyable, you spend more time on the app, right? And then you go share those videos out with other friends that bring them onto the app and things like that, right? And so it's very important that time spent on apps is very important. Why is that very important? Well, the more time you spend, let's say, for instance, you spend 5 minutes on Instagram or Facebook versus spending, 50 minutes on. Well, that's 10 times more ads they probably got to show to you during that time period, right? So therefore, it's a lot more valuable. It helps out ARPU in the end, right? And so time spent on app is definitely very important. So that's one way. Second way it's really helping Meta significantly is for advertisers. In serving up those ads, whether it be in stories or whether it be in the feed, right? Serving up those ads to people when they're ready to see those ads that are most relevant to them. And so, there's a spray and pray approach in regards to advertising where you're just flooding the money out there, or very targeted, very specific to this person. And then the AI recommendations, basically feeding those ads to the customer that's most likely to be interested in that particular product or service. So that's another way it's helping. And then the last is obviously through the llama model, and that's more of a longer term. So if you think about what's making a financial difference today, tomorrow, and next year, it's really about the first two I just covered. If you're thinking about what could be a game changer for Meta 5-10 years from now, it's the Llama models, right? And they're on to Llama 3 now at this point in time, and that seems to be building out very successfully. And that's going to be, that has the potential to be a very massive hidden play, kind of like AWS was for Amazon, many, many, many years ago. So just a little food for thought. So that's the three core ways that Meta is really benefiting, and you're already gonna be seeing it in the numbers now, and you're gonna see a lot more of it in future years, right? And once again, you're getting at a cheaper valuation than an Apple. That is why Meta's going to continue to outperform. I mean, Meta's destroyed Apple stock last couple of years, and it's going to continue to destroy that stock. I don't know why anybody in their right mind would want to play Apple over Meta. It's absurd. Plus, did you know what Apple has going for it right now also? Several major antitrust lawsuits now at this point in time. More states are jumping in on that. So I think the ramifications from the government side, they're really coming down on Apple. And if they at all disrupt that services business, if they say Google can't pay Apple the tens of billions of dollars they do a year, I mean, that's going to completely ruin Apple in the short term in terms of their profitability, right? If they do anything to damage that services business, right? And so that's just all food for thought in regards to that. Meta already went through all their crap. They already got through all that. They already had all the government agencies looking at them for years. So they already got past that moment. Apple's just really going through that moment. I don't think enough people are taking that serious because that can be a huge holdback of the stock for years. Believe me, it held back Meta for years.
That I've heard in a long time.
Steve, we have former President Trump, meeting with the Business Roundtable in Washington, D.C. today. You have come up with this idea that his reelection is
a certainty.
Inevitable at this point. Why is that, and what does that mean for the market?
Wow. He says it's a certainty T-Man's going to be reelected. That's interesting. That's another stick your head out there. He believes, wow.
My thesis is that the protesters on the college campuses are rapidly becoming, unfortunately, the face of the Democratic Party, although that's not 100% true yet. But that what's going to happen is in August at the Democratic Convention, which is in Chicago, ironically, given what happened in 68.
Yeah, 68, right.
They will convene there, and they won't be able to help themselves, and they will burn Israeli flags, and they will burn American flags, and they'll shout things like death to Israel and death to America or some variation of that. And the whole country's going to watch, and the whole country's going to be appalled. And at that point, the election will be over. It's not going to matter what anybody else says. That'll be done.
So what does that in turn mean for the markets, if that's your thesis?
I don't think it means a thing.
So first off, he's definitely emotionally wrapped up in that situation. I could just tell the way he's speaking. If you know anything about Steve Eisman's background and his religious views and those sorts of things, you'll understand he's definitely emotionally wrapped up in that. We'll speak about this a little deeper in just a second.
I actually don't really think it matters that much for the overall market who's president. It'll matter for certain subsectors. Probably some old energy stocks will do better. There'll be other things that might do better. But for the overall economy, I don't think it matters much at all.
In terms of the stock market, it does actually significantly matter who wins this election, in my opinion, whether it's T-Man or it's B-Man. And the reason being is B-Man wants to go up on corporate tax rates from 21 to 28%. That's taken away 7 percentage points of profits from these companies, right? It's not a small number. It's a substantial number. T-Man, from my understanding, T-Man has no interest in doing that, right? So if T-Man's elected, it basically takes that boogeyman out of the market. If B-Man gets reelected, it basically keeps that boogeyman in the market and everybody's saying, oh boy, our corporate tax rate's about to go up. Because in theory, you would say if all of a sudden corporate tax rates, let's say today, corporate tax rate's 7% higher, right? 7 percentage points. Okay, the market should go 7 percentage points lower. It should. Like the S&P 500 the very next day should go 7 percentage points lower, right? So it's not like it's a minuscule amount. It's very substantial. And then remember, it's not just that it's 1 year of, taxes going higher. It's year after year after year, you lose that 7% that you could be using on share buybacks, dividends, adding more cash to your balance sheet. Instead, that money's funneling to the government, right? So 100% it matters significantly. And there's a few other smaller policy things that I think matter between T-Man and B-Man for the actual, stock market in itself. But I think that's the biggest one, in my personal opinion, out of everything. Let's get into Cathie Wood here, ARK Invest CEO Cathie Wood. $2,600 Tesla price target.
On X, saying that shareholders have voted by a wide margin to pass two resolutions. At stake is Elon Musk's pay package, moving Tesla's legal home from Delaware to Texas. Voting is still open, we should mention. Final tally expected later today. Meanwhile, Tesla bull Cathie Wood raising her price target on the company. ARK Invest 2029 projection for the stock is now $2,600 per share. And joining us right now, first on CNBC at the table, is Cathie Wood, CEO and CIO of ARK Invest. Good morning to you.
Good morning, Andrew and Becky.
I very much want to talk about this price target, but I want to talk about this vote for just a moment.
Yes.
I know you supported his compensation package. Did you expect, and look, things can still change, but it seems like some of the big institutional shareholders broke for Musk late last night. That seems to be what's happened. Retail seemed to have broke for him earlier than that.
Yes.
But were you expecting that? And what do you think, if in fact this is the verdict, if you will, or the vote, what do you expect is going to happen next? Because it doesn't seem like the game will be totally over, because this is, of course, probably going to go back to court.
Well, first of all, you broke that news about the institutions, and I was surprised, actually, and pleased. But I do think what has happened here, it really started with ESG and all of the drama around that. And it got these large index players to say, wait a minute, should we be voting all of these shares? We should be taking into account some of our clients' preferences. And so I think it's opened the topic up. It's healthy, I think, very healthy. So, but nonetheless, I was surprised.
Do you anticipate that this becomes another years-long drama, given that this will go to court? Do you imagine the judge is going to look at this vote, say that the process was fair? I mean, part of this whole situation, as she said, the original process was unfair. We've had some lawyers come on our air and say, even if shareholders vote in favor of this, a judge could still strike it down.
You know, I am not a lawyer, but I learned what was at stake, lack of transparency about relationships with the board. Well, all of that has been completely exposed, and here we're having a vote, and I think it's more overwhelming than I would have expected.
So $2,600 a share.
Yes.
Help us do the math. How do you get there? What has to happen for all of that?
Get there?
This is a 5-year price target, as all of ours are. And what has to happen...
5-year price target? I thought this was going to be a 10-year price target. There's a 5-year, 26... what? The bear case 2,000? That's over 10x from here. The bear case is 2,000. I mean, this is why people have trouble taking Cathie Wood serious. When your bear case is 2,000, like, come on, man.
5-year price target, as all of ours are. And what has to happen is an autonomous taxi platform, Tesla's autonomous taxi platform. So robotaxis, which is a SaaS-like model. Instead of selling a car and maybe the software package, and that's it, this becomes a recurring revenue model, a slice of every mile driven on that autonomous taxi network. Very high margins. Right now, auto gross margins are around 16%. Gross margins in the SaaS world are more like 80%.
How big a market does that have to become for Tesla to get to the $2,600 price? The reason I ask is there are some cities that may allow this to take place. There may be geofenced areas where people are going to do this. And there's also obviously a larger view that one day these cars will be able to do everything by themselves everywhere in the country.
Yes. Well, this is the largest AI project on Earth, autonomous mobility broadly. And I think it's going to catch on as quickly as that. Now, of course, what we've had during the last 10 years is a movement toward FSD, and now we're seeing safety statistics. And I remember
full self-driving for those uninitiated.
Full self-driving. You look at the number of miles between accidents for the average car in the United States. It's about 200,000 miles. Right. You look at a Tesla without FSD, full self-driving, just autopilot. Right. It's more like 600,000 miles. With full self-driving and an older version, not even the latest, 6-9 months ago, 3.2 million miles. Tasha Keeney has done this work. You know, Volvo built a brand on safety, and I think Tesla's going to use
but we're in the middle of 2024.
Yeah.
You're saying we get to 2029.
Yes.
And that's where that price is. I think what I'm asking is, for your base case, for this to work, and by the way, we should say that Elon Musk tweeted out, extremely challenging,
yes,
but achievable, on top of your tweet.
Yes.
When does this all have to really go into effect?
Yes, we believe that they're setting up for robo-taxis, the network, within, I would say, 1.5 to 2 years. Elon would say maybe we'll start
But
it.
that also requires regulators to sign off on all this.
Yes, now regulators have an issue, and that is the auto accident rate has gone, after decades of going down with auto safety measures.
Right. Sharply. We talked to Pete Buttigieg about this yesterday. 40 to 50%. Texting is a big part of it. You know, disproportionately young people. Right. So deaths in the U.S. have gone from the low 30s. I think they got into above 40,000. So I think if regulators understand, and they do, that 85% of all traffic accidents are caused by human error. If you take the human out, you're going to make the roads safer. We literally asked Pete Buttigieg, the Secretary, the Treasury of Transportation, the Secretary of Transportation yesterday, Pete Buttigieg, about this, and he did sound like he was open to the idea as a result.
Yes.
And that's the first time I've really heard a public official who's kind of embraced it instead of saying, wait, we don't like the rise of the machine.
Absolutely. He is telegraphing that the roads ultimately are going to be much safer if you take the human being out of the equation. Much safer.
Yeah, but if T-Man gets reelected, then Pete's probably out the door, right? And so then T-Man could bring in somebody that, let's say, is not as welcoming, let's call it that, not as welcoming to self-driving vehicles, right? So these are all things to consider. They got to be seriously considered across the board, okay? Alrighty, guys, appreciate you joining me as always. Thanks so much for being here, folks. I'm going to get to work on a main channel video right now. And other than that, if you're looking to apply to join a private group, there'll be pinned comment down there. Much love and have a great day.